Hello, welcome. This is the eighth wonder of the world, compound interest. Today, I'll be talking about, this will be a little something different off the topic, but it's still, a lot of people don't know about the 2008 financial crash, like how we were bailed out, like what the one world currency is currently. So this episode is when the world economy collapses, special drawing rights, which are abbreviated SDRs, will be the one world currency. So before I get into that, I'm going to show you guys just a little snippet of what's going on in the market. But this has been on my mind. I've been doing some researching. So pretty much I'm going to let you guys know how it really works. We are already under one world currency, and how I adapted a lot of pretty much philosophies from the IMF, which is the International Monetary Fund, which is the one government, one bank government, one government of the world, pretty much the new world order is the IMF. So pretty much they deal in allocations. So let me go over my portfolio first, and then we'll get into the one world currency. So pretty much, what's today? Today's Tuesday. So pretty much, as you can see, you guys know I'm not a trader, so I'm not concerned about the 1 day, the 1 week, the 1 month, the 3 months, the 1 year. I always focus on the all, because I'm a long-term investor. So pretty much, I'm looking pretty good now. I'm up 4.65%, which is $265.77. Pretty much, the market's in the green, so okay, so I'm in California, so the market just closed. So it just closed. So pretty much, wow, I closed at 4.65. My goal is my goal this year is 6%, and in down markets, 3%. So it's just closed. The market's closed. So you guys heard the bell. That's the first time I heard that. Pretty much as of now, my assets under management, I have 77 assets under management. So here they are, listed from top to bottom. As you can see, I added 3 new ones. Industrial and Commercial Bank of China, which is the oldest bank and largest bank in the world. A lot of people don't know that. It pays a dividend yield of 3.94, low PE ratio, market cap 65.31 billion. As you can see, the peak, it peaked at I'm gonna say about $19 on June 26, 2018, and then I bought in pretty much at $15.12. So that was the first one, and I bought this with pretty much just money just laying around. So it was like $33, and I bought Commerce Bank, another old bank, pretty much European, and the peak on Commerce Bank probably back in April 4th, 2014, at about $20. So I bought pretty much at $7.30. Dividend yield, not mentioned. PE ratio 9.21. Market cap 9.01 billion. So as you can see, founded in 1952, but on Wikipedia they have an old list. It's the listing of the oldest banks in the world, and the Commerce Bank was pretty much, they were founded in the 1850s. So pretty much, I'm holding on to that one. And then the third one I bought yesterday was pretty much BlackRock Capital Investments. The peak for that is $10.06 on December 4th, 2015. So I pretty much bought it at $6.19. Dividend yield is 11.56. PE ratio 17.58. Market cap 438.21 million. So that's it. This is an ETF for me. So the other two were stocks, and this is an ETF. So I'm just finding that balance. So those 3 are new. The rest of them I have 77, as you can see. I'm not going to go through all of them. This is not the episode for that. I'm pretty much focused on the one world currency. So, and these are 77. I'm just going to go through them. So, I'm building my pyramid. Got 77. You could look at this any kind of way. Like, it's just so, for me, it's inspirational. Like, to have just 77. You know, you can call them your employers. They can be your troops. They can be bullets for your gun. I mean, anything to find motivation. I've noticed, you know, with a lot of people, it's in the end, it's all about motivation, having fun with this. So that's why I'm not stressing it. I'm only focused on the basics, you know, the formula, you know, for the rest of my life. So, and play that way. So, I mean, in the beginning, my games are gonna be like this. And plus, you know, I'm building my foundation. I'm not even near building my fortress. So I'm still at the bottom. So, but I know once the walls go up and the momentum starts to pick up, and you guys are gonna see it. So, because I'm documenting this daily. Excuse me. So that's that. Okay, let me jump into the current topic. When the world economy collapses, special drawing rights, SDRs, will be the one world currency. Okay. Before I go into that, I'm gonna show you guys pretty much the currency. And as you can see, IMF special drawing rights, 1 XDR equals 1.3888 US dollars. So pretty much, if you look at the strength of this special drawing right, it's stronger than the British pound, which is at 1.28. It's stronger than the euro, which is at 1.13. It's stronger than the Chinese yuan, 0.1476. So you get the picture. It goes so forth. So the weight is down there, the way they break it down. And I'm surprised that the Venezuelan bolivar is stronger than the Colombian peso, the South Korean won, the Filipino peso, and the Argentine peso. So as you can see, that their currency has a lot of power. And a lot of people don't think about it. They think, oh, Venezuela, that's a poor country, blah, blah, blah. But that's a powerful country. That's a powerful country, because if you look at their currency, that's weight compared to Argentina, the Philippines, South Korea, and Colombia. They have a strong currency. So this is why I'm learning about the one world currency is already here, which is the IMF special drawing right. So I'm gonna get into you and show and read over Wikipedia, their version, and then read from the website from the IMF to show you guys what the one world currency is, and to show you guys that because of the 2008, that's why we didn't feel what we felt. We didn't feel like previous depressions, because we're getting more sophisticated. Everything is allocated. Everything is pretty much the IMF has this special drawing rights in case of they allocate it in case of emergency. So when 2008 hit, they had to see if it qualified for this SDR, and it bailed it out. So I'm gonna show you guys. That's why now I'm like, holy shit, this is starting to click, and I'm glad I never gave up, but I'm finally realizing, you know, what this is. So let's jump into it, because I'm excited just discovering this. So okay, special drawing rights, Wikipedia. Okay, special drawing rights, ISO 42717, currency code, SDR, also abbreviated SDR, are supplementary foreign exchange reserve assets defined and maintained by the International Monetary Fund, IMF. The SDR is the unit of account for the IMF and is not a currency per se. SDRs instead represent a claim to currency held by IMF member countries for which they may be exchanged. The SDR was created in 1969 to supplement a shortfall of preferred foreign exchange reserve assets, namely gold and the US dollar. Okay, as you can see, special drawing rights. It's under ISO 4217 code XDR number 960. So usually when you see that ISO 4217, that's pretty much all the currency codes of the world. So it has all of them listed: symbol, denomination symbol, SDR, demographics, date of introduction, 1969, user, IMF, and then valuation pegged with the US dollar, the euro, the Chinese yuan, which is fairly new, Japanese yen, and then pound sterling. So pretty much this is just telling you these are the 5 powers of the world. That's how I look at it. If your currency has to be so strong that you put it together as one, and then you create this SDR. And it continues. SDRs are allocated to countries by the IMF. Private parties do not hold or use them. The amount of XDRs in existence was around XDR 21.4 billion in August 2009. During the global financial crisis of 2009, an additional SDR 182.6 billion were allocated to provide liquidity to the global economic system and supplement member countries' official reserves. By October 2014, the amount of XDRs in existence was SDR 204 billion. So as you can see, that's how we were saved, because there was already these 5 countries that I mentioned up here had a basket of reserves and building interest, and when it was time to get bailed out, they went to the IMF, and the IMF bailed them out. I don't know why this is not on the news. Okay, so the value of the SDR is based on a basket of key international currencies reviewed by the IMF every 5 years. So that's pretty much where I get a lot of my concepts from, the IMF. Pretty much last year with my portfolio, I was about 95% stocks. I didn't have no type of ratio. So now I'm more pretty much get into a 5 split, pretty much with stocks, 60%, index funds, 30%. What else I got? Bonds, ETF 5%, and then REITs 5%. So I got 4. So I'm looking for a 5th one, but as of now, 2019, that's what I'm looking at. Those are my 4, and I pretty much I borrowed this concept from the IMF. The weights assigned to each currency in the XDR basket are adjusted to take into account their current prominence in terms of international trade and national foreign exchange reserves. In the review conducted in November 2015, the IMF decided that the renminbi, the Chinese yuan, would be added to the basket effective October 1st, 2016. So that's another thing too they don't talk about. That's how the Chinese were able. People are like, whoa, the Chinese, they don't understand. Once they got into this basket, their economy took off. That's what really helped them, because now they can borrow from here and grow. You see what I'm saying? A lot of people are not seeing this. This is the key. This is the one world currency already in place already. It's right under our noses. So that's why the Chinese was able to take off like it did, because this was 2 years ago or 3 years ago. So, and that's when the Chinese, you notice back 2-3 years, they started to take off. That's the reason. From that date, the XDR basket now consists of the following 5 currencies. US dollar, 41.73%. As you can see, still the strongest. Euro, 30.93%. Second, renminbi, the Chinese yuan, 10.92%. Japanese yen, 8.33%. And then the British pound, 8.09%. That's why you have the Britics, because they've disconnected from the euro, because they have their currency so strong. Man, that's a whole nother episode. I'm not going to get into that. So pretty much, if you guys want to go into depth, here it is: name, history, value, definition, value of one XDR, interest rate, allocation, exchange, other uses. Pretty much the nice Wikipedia that we know. So you guys can dive into that. So this is where I really want to read from. This is from the IMF.org, the International Monetary Fund fact sheet, and you can pretty much catch this, and you can translate this into, I think that's Arabic, Spanish, French, I think that's Mandarin, Russian, and I don't know what it might be from India. Okay, special drawing right, SDR. The last update was April 19th, 2018. The SDR is an international reserve asset created by the IMF in 1969 to supplement its member countries' official reserves. So far, SDR 204.2 billion, equivalent to about US 291 billion, have been allocated to members, including SDR 182.6 billion allocated in 2009 in the wake of the global financial crisis. The value of the SDR is based on a basket of 5 currencies: the US dollar, the euro, the Chinese renminbi, the Japanese yen, and the British pound sterling. So as you can see again, I'm going to read it again. So far, SDR 204.2 billion, equivalent to about US 291 billion, have been allocated to members, including SDR 182.6 billion allocated in 2009. So that's, you see where we got saved at. And then this is never talked about in the wake of the global financial crisis. So that's why we didn't go through a depression like before, because they're getting smarter. They created the IMF to offset any depression or collapses. So that's why me investing in a system, I want to make sure that, the system is going to be around, and that's why I started digging deep. I like exploring, and then I just pretty much started putting this together. The role of the SDR. The SDR was created as a supplementary international reserve asset in the context of the Bretton Woods fixed exchange rate system. The collapse of Bretton Woods system in 1973 and the shift of major currencies to floating exchange rate regimes lessened the reliance on the SDR as a global reserve asset. Nonetheless, SDR allocations can play a role in providing liquidity and supplementing member countries' official reserve, as was the case with the 2009 allocation totaling SDR 182.6 billion to IMF members amid the global financial crisis. The SDR serves as the unit of account of the IMF and some other international organizations. The SDR is neither a currency nor a claim on the IMF. Rather, it is a potential claim on the freely usable currencies on IMF members. That's it. SDRs can be exchanged for these currencies. They just came up with a way to pretty much offset any disasters, any collapses with this SDR. Geniuses, if you ask me. A basket of currencies determines the value of the SDR. SDR value. The SDR value in terms of the US dollar is determined daily based on the spot exchange rate observed at around noon London time and posted on the IMF website. The SDR was initially defined as equivalent to 0.888671 grams of fine gold, which at the time was also equivalent to $1 US. Interesting, I didn't know that. After the collapse of the Bretton Woods system, the SDR was redefined as a basket of currencies. Genius. The SDR basket is reviewed every 5 years or earlier if warranted to ensure that the SDR reflects the relative importance of currencies in the world's trading and financial systems. The reviews cover the key elements of the SDR method of valuation, including criteria and indicators used in selecting SDR basket currencies, and the initial currency weights used in determining the number of units of each currency in the SDR basket. These currency amounts remain fixed over the 5-year SDR valuation period, but the actual weights of currencies in the basket fluctuate as cross-exchange rates among the basket currencies move. The value of the SDR is determined daily based on market exchange rates. The reviews are also used to assess the appropriateness of the financial instruments comprising the SDR interest rate, SDRI basket. Okay, during the last review, as you can see, the currencies, US dollar, weights determined in the 2015 review. So they said so next year will be there'll be the next review. But until then, the US dollar is at 41.73, the euros at 30.93, the Chinese Yuan 10.92, Japanese yen 8.33, and the pound sterling 8.09. Concluded in November 2015, the board decided that the Chinese renminbi RMB met the criteria for inclusion in the SDR basket. Following this decision, the Chinese RMB joined the US dollar, euro, Japanese yen, and British pound sterling in the SDR basket, effective October 1st, 2016. So there you have it. To me, if as an investor, that's why I'm a global stock investor also. So pretty much I invest in the United States, in Europe, in Chinese companies, in Japanese companies, and then in companies from England, because as you can see, these countries are pretty much their saviors from this special drawing right. So that's another thing too, when I started looking at the market and wanting to invest more out, I know in America it's strong, we have it, but as you can see, it's spread. It's so the playing field is spread up amongst 5 power countries. So the SDR interest rate, SDRI. The SDRI provides the basis for calculating the interest rate charged to members on their non-concessional borrowing from the IMF and paid to members for their remunerated creditor positions in the IMF. It is also the interest paid to members on their SDR holdings and charged on their SDR allocation. SDRI value, determined weekly based on weighted average of representative interest rates on short-term government debt instruments in the money markets of the SDR basket currencies, with a floor of 5 basis points. It is posted on the IMF website. So as you can see, interest rates on the SDR from 2009 to now, so they pretty much raised it. So you know what that means. Okay, SDR allocations and transactions. SDR allocations, general and special. As you can see, from 1970 to 1972, SDR was 9.3 billion. 1979 to 81, they allocated 12.1 billion. And in 2009 special, as you can see, they have a general and a special. So in 2009, they used both because of the collapse. So they used the 2009 special for 21.5 billion, and then on top of that, they used a general 2009, an additional 161.2. I don't know if that's that 21.5 billion is. I would say they're separated because it's 2 different categories. So in all, that's about like 200 billion that they invested into the 2008 collapse. One world currency. Under the Articles of Agreement, when certain conditions are met, the IMF may allocate SDRs to members participating in the SDR department in proportion to their quotas, known as a general allocation. Okay, there you have it. A special one-time allocation in 2009 enabled countries that joined the IMF after 1981, i.e. after previous allocations, to participate in the SDR system on an equitable basis. The SDR mechanism is self-financing and levies charges on allocations which are then used to pay interest on SDR holdings. Members can buy and sell SDRs in the voluntary market if required. The IMF can also designate members to buy SDRs. Okay, criteria for inclusion in the SDR basket. Export criteria. Issuer of currency is an IMF member or a monetary union that includes IMF members who is one of the top 5 exporters of the world. Determined to be freely usable currency by the IMF. Currency is widely used to make payments for international transactions and is widely traded in principal exchange markets. As you can see, there's a 2015 SDR review. SDR valuation and SDRI basket composition. Effective October 1st, 2016, the Japanese RMB was included in the SDR basket, and the 3-month benchmark yield for China Treasury bonds was included the SDRI basket. The inclusion of the RMB in the SDR basket has diversified the basket and made its composition more representative of the world's major currencies. Weighing formula. A new formula assigning equal shares to the currency issuers, exports, and a composite financial indicator was adapted to determine the currency weights in the SDR basket. Operational implications. Since October 1st, 2016, the RMB is a freely usable currency and can be used in financial transactions. I'm mind blown. So I'm just sharing this with you guys to get even a more in depth. I'm gonna play this video for you guys explaining the SDRs, special drawing rights. So take a second to load.
The Special Drawing Rights, or SDR, was created by the IMF in 1969 to supplement the official reserves of its member countries. The SDR is an interest-bearing international reserve asset that can only be held by the IMF, its member countries, and designated official entities known as prescribed holders. In addition to this role, the SDR serves as the unit of account of the IMF and several other international organizations. The IMF's financing arrangements with its member countries are denominated in SDRs. The value and yield of the SDR are defined using a basket of major currencies, which are selected due to their importance in the world's trading and financial systems. The SDR value is calculated daily, while its interest rate is determined on a weekly basis. The IMF Executive Board reviews the composition of the SDR basket every 5 years. This composition is revised to reflect major changes in the roles of various currencies in the world economy, and thus to enhance the attractiveness of the SDR as a reserve asset. In its most recent review in 2015, the board expanded the basket to include a 5th currency, the Chinese renminbi. The basket will now include the US dollar, euro, Chinese renminbi, Japanese yen, and pound sterling. SDRs are allocated to members in proportion to their IMF quotas and relative economic standing in the world economy. Every 5 years, the IMF reviews whether there is a global need for additional international reserves to justify a new allocation of SDRs. The most recent and by far the largest allocation took place in 2009 as part of the response to the global financial crisis. Currently, the amount of SDRs stands at over 204 billion. These allocations provide each member with on-demand access to freely usable currencies. Members can exchange SDRs for freely usable currencies from other members to meet a balance of payments need or to adjust the composition of their reserves. The SDR is therefore not a currency, nor a claim on the IMF, but a potential claim on the freely usable currencies of IMF members. At the time of the allocation, a member country is assigned 2 positions of the same amount: its SDR allocation and its SDR holdings. It receives interest on its holdings and pays interest on its allocation. The interest earned by a member on its holdings and paid out on its allocations are both based on the SDR interest rate. This means they cancel out completely as long as SDR holdings are equal to SDR allocations. The SDR market functions primarily through voluntary trading arrangements, or VTAs. Under these arrangements facilitated by the IMF, members volunteer to buy or sell SDRs. If a member exchanges SDRs for freely usable currencies, its SDR holdings fall, while its foreign currency reserves rise. If its holdings fall below its cumulative allocations, it has to pay interest on the shortfall. If a member exchanges freely usable currencies for SDRs, its SDR holdings rise above its cumulative allocations, and it earns interest on the excess. In the event that there is insufficient capacity under the voluntary trading arrangements, the IMF can activate the designation mechanism, where it calls upon members with strong external positions to purchase SDRs from members with weak external positions. The value of the SDR as a reserve asset thus derives from the right to exchange it for freely usable currencies. Through this, the SDR plays an important role in providing liquidity to the global economic system.
Okay. So there you have it. So I don't know if that blows your mind or whatever, but that's pretty much our current one world currency. And a lot of people are oblivious to it, and this is pretty much the current state that we're in. So that's it for that. I just wanted to show you guys, what are, when the world collapses or recession or depression, we'll never ever go into them ever again, ever, because of the IMF, because of this special drawing right that they formulated. And I think they are geniuses, and a lot of people pretty much we don't know anything about this, so that's why I had to pretty much let you guys know. The stock market is always going to be, you're always going to grow wealth in the stock market. So for those of you that have fear in it and think that that you'll lose your money, it's not going anywhere. Especially just reading this now, this is our one world government. One world currency. One world government is the IMF. One world currency is this special drawing rights. And you can see the 5 countries that they have for the basket that makes it up. And you saw the video. So subscribe to the channel. Like if the content was inspiring for you. Comment anything that's on your mind. What are your thoughts on special drawing rights? Have you ever heard of them? Or, what do you think? You think this is far-fetched? Do you think this is reasonable? Do you think I'm just giving you a Nostradamus prediction or something like that? Let me know. I really want to know what you guys feel. This has been on my mind for the longest. It's just, to me, being a stock market investor is fascinating. I want to know everything about it, not just not just the mainstream that everybody talks about. To me, it just got boring, looking at people's YouTubes talking about the same, my portfolio and this company's going up, and it's just so repetitive. It just felt like I was in another box. So that's why I had to share this with you guys, to let you guys know that this is real, this SDR. And as you can see on the converter, on this XE converter app, these pretty much, I use all these currencies, but pretty much the top. So now I know, the top currencies now, is is pretty much the dollar is at top. The dollar, the euro, the Chinese yen, and then the Japanese yen, and then the British pound. And then now you have this IMF special drawing rights that is pretty much the one world currency for us now. Until next time, let compound interest